Hello everyone, welcome to BISP Solutions. We are a global provider of technology driven solutions. So, in this session, we will introduce the foundational concepts of financial modeling, which plays a critical role in strategic business planning and financial analysis. So, in our previous session, we have discussed about why we are using financial modeling in Excel and how it helps us and our company in identifying the position of our company and also how it helps in forecasting our profits or sales, or we can say the expenditures. So just for reiteration, first we have to understand that what is financial modeling. So financial modeling is like a smart calculator, or we can say plan in Excel or Google Sheets, which will help a person or a company understanding their money, how much they earn, spend, save, invest, or may lose, and what might happen in the future. So this is what our financial modeling is about. So we will be completing our previous sessions learnings of financial statements, where we have to go to our Chrome, where we will be downloading our company's data. So I am using my screener.in and I am taking company as Eicher Motors Limited. And now here you all can see the page opens of Eicher Motors, and here you all can see the graph, also line graph is there. It is showing price fluctuations from till 1 year. So it is showing price on NSE, and the pros: company is almost debt free, company has delivered good profit growth of 21% CAGR over last 5 years, and company has been maintaining a healthy dividend payout of 36.7%. So what is cons? Cons is earnings include an other income of 2005 crores. So peer comparison, it is also showing us that peer comparison is about 7 companies like Bajaj Auto, Eicher Motors, TVS Motors, Motor Corp, Ola Electric, Ether Energy, Iraya Lifespace. Like, peer comparison is the Eicher Motor is an automobile company, so other automobile companies comparison is also given over here. Then it is showing us quarterly results, profit and loss statement, and balance sheet, and cash flow statement, and ratios, shareholding program documents we can download. So what I want a simple thing to be done. Like, I want every single data to be exported in Excel to me. Now I have downloaded my Excel sheet, so it will be like this, right? So here we get our profit and loss, quarterly result, balance sheet, cash flow statement, customization, and data sheet. So they are asking us that do not make any changes to this sheet. So what I have done, I have copy pasted the same data to my another sheet, and what I will be doing, I will be making a separate sheet for every single calculations, and I will be keeping all my data, like data sheets I have taken from screener.in in this in right hand side, so that my calculations sheet and my actual data sheet will be having gap in between, right? So now I will be making my historical financial statements for Eicher Motors, and I have taken all the heads which I will be requiring in calculation of my financial statements. So for the same, what I will be doing, I will be interlinking every single heads for financial statement, so that if there's any changes in my financial statement, or I am changing my financial statements of my Eicher Motors from another company, like I am taking Infosys or Wipro or any IT consulting company, or I am taking any FMCG like Nestle or Britannia or like that, so it can get on its own changed. I don't have to do any manual entry on that thing. So what I will be doing, I will be coming to my data sheet, my historical financial statement, and what I will be doing, I will be clicking on equals to, and I will be using my if error function, so that whenever there is no digit in data sheet, so it will be giving us 0 rather than any hashtag or value or NA or any error it will be giving us. So it will be looking good if it gives us dash or 0, so that our financial model is given to our financial analyst, so it will be giving a professional modeling thing in front of them. So that's why we are using if error function. Now what I will be doing, I will be linking it with my datasheet sales, and it is March 16 and 0, and done. This is what our sales, and I will be doing drag and drop till the end. Now if I want to calculate my sales growth, so March 16, before March 16 I am not having any data, so what I will be doing, I will be starting from March 17. From March 17, 7033 will be divided to March 16 minus 1, so it is giving me percentage. So why I'm doing sales growth and COGS percentage of sales, because I will be requiring it in my ratio analysis, right? So now what I will be doing, for calculating COGS, which is cost of goods sold, what I will be doing, again if error function I will be using, then sum function, because I have to add many different heads in datasheet. So I will be going to my datasheet, and then I will be adding my raw material cost and other manufacturing cost and my employee cost also, and I will be closing the bracket and then minus 1, and now I will be multiplying my inventory cost, which is change in inventory cost, and this is done. Control plus C and drag it till the end. Now it is asking us COGS percentage of sales. So what I will be doing, I will be taking my COGS and I will be dividing it with my sales, and control plus C and drag it till the end. Why I am using this formula, I have already explained in my previous session also, that if I want to calculate my financial statements, income statement, so I have some heads, and to reach to my net profit I have to deduct some expenses, and also incomes will be gained to us. So whatever the expenses are there, I have to deduct it, so that I can reach to a result of profit or loss a company is making, right? Now if I want to calculate my gross profit, so my sales minus cost of goods sold and control plus C and drag it till the end. Why I have taken COGS and sales, so that my gross profit will be calculated, so that I can move forward. Okay, so now I have to calculate my gross margin also. So what I will be doing, I will be clicking equals to, and again gross profit divided by my sales, control plus C, again dragging till the end. Why I'm dragging it again and again till the end, because same formula will be used in different years, right? And selling and general expenses, what I will be doing, if error function I will be using, and again sum, because we have to calculate it. So again we will be going to my data sheet, and what I will be doing, I will be taking my March 16 selling and administration and other expenses data, and I will be closing the bracket and 0, control plus C and dragging till the end. Then selling and general expenses percentage of sale. So this selling and general expenses will be divided with my sales, and we got our S&G expenses percentage sale. Now EBITDA we have to calculate. EBITDA is earnings before interest and taxes and depreciation. So what I will be doing, I will be deducting it from my gross margin or gross profit, we can say, control plus C, and dragging till the end. Now I have to calculate my EBITDA percentage margin. So what I will be doing, I will be taking my EBITDA and dividing it with my sales, control plus C, and dragging till the end. Like that only. Interest I have to take from my data sheet only. I will be going to my data sheet and coming down right, and my function is completed. Now I have to calculate my interest percentage of sales. So interest, which is 2.12, and sales, so it is giving me 0.03%, and dragging the same formula till the end. Now depreciation, if error function, again data sheet we have to go, and depreciation we have to take from data sheet and continue this, and control plus V. Again we have to calculate our depreciation percentage of sales. So what we will be doing, depreciation which we have calculated, which is divided by sales, and same data will be pasted till the end. Now EBITDA is calculated. Now I have to calculate my EBT, which is earnings before taxes. So what I will be taking, I will be taking my EBITDA, and then I will be taking sum, because my interest and my depreciation, like this I will be calculating. Now it is asking me EBT percentage of sales, so I will be taking this. Now it is converted to percentage, and I will be taking till 2 decimal function, and I will be doing this formatting, and same formatting is done till the end of this calculation. Right now what I will be doing, same formula is pasted. Now text, it is asking us, so first if error function we will be using, then going to our data sheet and taking our text and 0, done, control plus C, and paste it till the end. Now what I will be doing, I will be copying this and selecting this, and control alt and V. I want my format to be pasted, and then OK. Now effective tax rate we have to calculate. So what we will be doing, I will be taking EBT divided by my tax will be first, and it will be divided by my EBT, control plus C, and dragging till the end. Now what I will be doing, control plus C, control alt and V, and I want format to be pasted. Right now net profit I want to calculate. So what I will be doing, I will be taking EBT minus taxes to reach our net profit, and paste it till the end. Now again what I will be doing, I want only format to be pasted, and selecting this, control alt and V, I want format to be pasted. Right now I want to calculate my net margin. So what I will be doing, net profit divided by my sales, as we have calculated for our every single data head. Now percentage we will be using, and 2 decimal. Now this is copied to my same is there. Right now it is asking a number of shares. So number of equity shares we will be taking from our data sheet, where we will be getting it, we have to search for it, and right here we will be taking our number of share, control plus C and dragging till the end. Right, now earning per share we have to calculate. How to calculate that? Again, if error function. Now net profit whatever we have taken, and which is divided by number of equity shares, and 0, and done. Control plus C, earning per share is calculated. Now I will be copying this particular format to my this. Right, now I want to calculate my EPS growth percentage. So what I will be doing, from this divided by my this and this one, control plus C and drag it till the end. Now percentage and 2 decimal function. Now copying this, and I want this Control Alt plus V, or formatting is done. Right, now I want to calculate my dividend per share. Right, so what I will be doing, I will be clicking if error, then dividend amount which is in our data sheet. We have to find our dividend amount which is this, and 0. This is our dividend per share, and dragging till the end. So it is we will be copying the format. This is our dividend per share. Now we have to calculate our dividend payout ratio. So what to do there? If error, and now we will be doing our dividend per share divided by my earning per share, and it is 0. Done. Control plus C and dragging till the end. It will be in italic, and this one percentage, no, it is not in percentage. We want only 2 decimal ratio. Right, now retained earnings, how to calculate that? If error function again we will be using, and 1 minus dividend per share ratio, and 0, and this is done. Control plus C and paste it the same. Now it is showing us minus in front of our digits, so control plus 1, customizing the same, and yeah, like this we want, and it is showing us. Right, now if I want to calculate my balance sheet total, so equity share capital is, it is asking again if error function I will be using, and data sheet. Now I will be going to my balance sheet. Over here it is, and 0. Done. Control plus C and paste it. I will be pasting or linking every single thing first, and then I will be formatting. Then reserves, it is asking us okay, it control plus C and control plus V. So reserves are correct. Right, it is correct. Now again borrowings, if error, data sheet and borrowings, and done. Control plus C and dragging till the end. Now other liabilities, if error, other liabilities, again data sheet we will be going, and this is done. Control plus C and dragging till the end. Now if I want to calculate my total liabilities, so what I will be doing, if error function I will be using sum of these 4 I will be calculating, and 0, and done. The same will be dragging till the end. Now Control plus C. Now I will be doing formatting for the same. Now I want this border to be there. So how can I do? So what I want, I will be selecting this, and I will be clicking Control plus 1 and going to my borders, and I will be doing this, right? So my total liabilities will be coming like this, right? And now I have to link my fixed assets block, net block. So for that, this one, Control plus C and drag it till the end. Now capital work in progress, again if error function we will be using, and capital work in progress March 16 we will be taking. Control plus C and drag it till the end. Now investments, if error function we will be using, and data sheet, from data sheet if error and investments, Control plus C and drag it till the end. Now what I will be doing, I will be doing formatting for these three heads. Control Alt and V, formatting is done, right? Other assets, what we will be doing, if error function we will be using, and now I will be using sum function. Sorry, I will be first taking my other assets from my data sheet, and then what I will be doing, I will be giving subtraction sign, and after that what I will be doing, I will be taking sum, and I will be deducting receivables and inventory from it, and 0, done. So it is what it is asking us. Just a second, I remove this function, right? Control plus C and drag it till the end. Control plus C, and same thing will be right. Now non-current assets we have to calculate. We will be doing sum of these 4 and closing the bracket. Control plus C and just a second, and paste it the same, and bold, right? Receivables, if error receivables are as it is, we will be linking over here. Why we have deducted other assets and receivables and inventory? Because our other assets was consisting of my receivables and inventory, that's why I removed it from calculations. So now I can calculate it individually. So again, if error function I will be using, and inventory I will be taking from here. Control plus C and control, drag it till the end. Cash and bank, it is asking us, so what to do over there? Again data sheet, and cash and bank 0, done. Control plus C and drag it till the end. Now if I want to calculate, again what I will be using, sum function, Control plus C and dragging it till the end. Now I want to do formatting for all of these, so what I will be doing, Control Alt and V, and formatting is done. Right, now I have to calculate my Again this border is removed, so what I will be doing, I will be giving it again. Now it is asking me the total assets. So what I will be doing, total assets is equals to if error sum of my total non-current assets and total current assets Control plus C and drag it till the end. Now taking one, formatting and dragging it till the end. So now coming down, we have to do one thing. We have to freeze the pane over here, and so that it will be easy for us to do calculation for a particular year. So we will be doing cash from operating activities starting from our profit from operations. So I will be taking my, so in this data sheet I am not getting enough data for our calculation, so I will be removing my function, and again I will be going to my Chrome, and there I will be finding my cash flow statement. So from this document only cash flow I will be taking, I will be expanding these individually and will be copying this, and then what I will be doing, I will be opening this and Control and Alt plus V, then text only I want, and Alt HOW, there one, right, and I will be expanding it, I will be bolding it out so that I will get a knowledge of the same. So I am hiding this and this also, because we will be taking March 25 should be hidden, right. Now I will be taking these, right. So what we will be doing, now as I copied it, now again going to my historical FS if error function, and it is asking me profit from operations. I will be linking it with my this equals to if error receivables and 0 done. Oh sorry, receivables cash flow statement we will be going, and March 16, right, dragging it till the end. Again inventory if error function, and inventory is this, Control Alt and V if error function, again payables, it is done if error function, loans and advances, paste it till the end, equals to if error other working capital changes, Control plus C and drag it till the end, direct taxes. Now we will be using our direct taxes also if error function, and we will be taking it with a 0, right. Control plus C and drag it till the end. Now we have to calculate sum function we will be using for calculation of this. Control plus C and dragging it till the end, bolding the same, and I will be using my, just a second, this formatting for negative Control Alt and V. If I click on format, right, so now what I will be doing, I will be doing formatting for my same Control Alt and V formatting to be done. Right, now bolding the same and border we will be giving to our data so that we can get a knowledge about the same. Fixed assets purchased, if error. Cash flow statements 510, done. If error, fixed assets sold. This. If error, investments purchased, yes, equals to if error, investment sold, it is this. If error, interest received, done. If error, and dividends received, it is asking us, so again cash flow statement and dividend received 0, equals to if error, investment in group costs is this, and done. If error function, other investing items, so we will be taking there. So copying the same and dragging it till the end. Now what I will be doing, Control plus C and Alt and V, formatting done. Okay, right, so our formatting is done. Control plus C, not doing any single thing, so it has taken this, right. Control plus C and dragging it till the end and bolding it out so that it will be look different, right. If error function, again what we will be doing, coming down and 0, done. Control plus C, dragging it till the end. Again if error function, cash flow statement and 0 0. All the formatting will be done afterwards also, so don't worry about anything currently, only do the needful right now. Control plus C and drag it till the end, equals to if error, interest paid in, yeah, that's like this, and paste the same, equals to if error function, dividends paid, so this is what. Control plus C and drag it till the end. If error function, financial liabilities, over here it is like this. Control plus C and drag it till the end, equals to if error, other financing activities, so it will be here like this. Control plus C and drag it till the end, so like this what we will be doing, copy pasting the same, copying the same, and Control Alt and V, formatting done, and the same formula will be pasted over here. How it has taken, right. Control Alt and it is done, right? In the place of 0 they are taking dash, right? And now again equals to sum, now taking this and this and done. Control plus C and dragging till the end. So our net cash flow is 9960 and all, right? So this is how we make our financial statements for the company Eicher Motors. Now coming to our PPT. So we have already made our financial statements of Eicher Motors from scratch. So through that financial statements, what we got to know that we should understand now, like analysis of income statement we will be taking. So first is revenue. So why we are analyzing income statement first? Because the income statement shows us how much the company earned, spent and profited. So revenue, which is sales, so it has grown from 8,738 crores to 17,885 crore. Also, sales dipped slightly in 2020 and 2021 due to possible reasons of COVID-19 impact, but recovered strongly afterwards, and healthy growth in recent years, showing strong market demand and good business performance. Then comes our gross profit, which is revenue minus direct sales or direct cost. So it has increased significantly from 2,135 crores to 4,583 crores, and this means the company is keeping more money after covering production cost. Operating profit, which is EBITDA, from 1192 crores to 5649 crores. It is strong, means there is a strong rise, which means better cost management and improved efficiencies there. And EBITDA margin, which is profit percentage on sales, went up from 13% to 31%, which is an excellent for auto industry. Then net interest cost, where it is also said as loan cost, where it stayed very low. For example, like 7 crore rupees to 54 crores rupees, showing almost no heavy debt burden. Financially it is healthy. Then analysis came from balance sheet. So the balance sheet shows what the company owns, which is assets, and owes, which is liabilities, and its net worth, which is equity for the company. So assets, strong growth in total assets indicating expansion and investment, and investments in property, machinery and other fixed assets show long-term planning. Then liabilities, where what the company owes, where debt levels are very low, company finances growth from its own profit, and low interest cost is equals to low risk. Then comes our equity, where shareholders equity has grown steadily, indicating retained earnings being reinvested and stable financial structure is there. Then analysis from our cash flow statement, where the cash flow statement shows how much actual cash came in and went out. Operating cash flow, which is cash from core business, so there is a strong increase from 496 crores to 3724 crore, and shows the business earn good money from its main operations. Then comes our investing activity of cash flow, where often negative, means the company is regularly investing in assets, for example plants, technology, etc. This is a good if it return on those investment is high, which EBITDA and sales growth suggests it is. Then financing cash flow, where very minimum, showing company avoids heavy borrowing, and also shows occasional dividends or share buybacks. So with this, what we understood, sales and revenue is strong growth is there, profitability healthy margin is there, debt very low is there, and cash generation very strong of that company, and investments there is a high reinvestment growth focused mindset. Then comes our overall verdict, where Eicher Motors is financially strong and well managed company with strong and growing revenues, increasing profits and high efficiency, minimal debt is there, and healthy cash flows are there, and it's a good sign for investors, stakeholders or analysts looking for a fundamentally solid company. Then comes our today's agenda, which is ratio analysis and types of ratios, and example of ratio by taking company's data. So first of all, we will understand what is ratio analysis. Ratio analysis taking your health with basic text like blood pressure, sugar level, BMI, etc. In the same way, ratio analysis checks a company's financial health using different formula made from numbers found in its financial statement, like income statement, balance sheet, cash flow, like that. And we don't have to need to memorize formula for the same, just understand what each ratio tell us, right? So why do we need ratio analysis? We use ratio analysis to know how strong or weak a company is, see how efficiently the company is working, and compare this year's versus last year or with other companies, and help investors decide whether to invest or not, and help business owners making better decision. How it helps the company? It tells us if profit are rising or falling. It identifies if the company is using resources well, and it shows how much debt is safe or risky, and it flags if the business is overspending or underperforming. Key financial ratios: first is our profitability ratio. So ratio net profit margin, which will be calculated from net profit divided by sale. So what it means, after all cost, how much profit from every 1 rupees of sale is there. And what it shows higher percentage is equals to more profitable. Then comes a gross profit margin, where gross profit divided by sales. So before expenses like rent or salary, how much profit is there, and what it shows pricing plus cost control is there. Then return on equity, where net profit is divided by owner's money. So it means how well company uses investors' money, and what it shows, higher is equals to better returns for owners. Next is our liquidity ratios. Ratio is current ratio, where we will be dividing current assets with our current liabilities. So what it means, can the company pay its bill in next 1 year? What it shows, less than 1 is generally safe. And quick ratio is current assets upon current assets minus inventory, which is divided by current liabilities, same as above, but faster the cash is there. And it is also there that less than 1 is better. Efficiency ratios, where ratio is inventory turnover, which is calculated by COGS, which is cost of goods sold divided by inventory. And what it means, how fast we sell and restock our goods. What it shows, higher, which means good selling fast. And receivables turnover, where we will be dividing our sales from our debtors. So it means how fast people pay you. And what it shows, higher, it means better cash flow is there. Then leverage ratio. So ratio is debt to equity, where total debt is divided by owner's money, which means how much borrowed money versus own money. What it shows, lower, which means safer company. Interest coverage ratio is operating profit divided by our interest, which means can company easily pay loan interest, which means higher, safe to handle the debt of the particular thing. So how do these ratio affect the company? So investors look at ratio to decide if they could put money in, and bank use ratios before giving loans, and management uses them to fix weak areas like low profits, high debt, slow payments, like that. So what do we gain from ratio analysis? By analyzing ratios, we find out whether company is strong or weak, we can predict future problems early, and we decide whether company is growing, stable, or declining. And it helps in comparing with competitors. So how to tell if a company is financially healthy? So high net profit margin, which is profitability, current ratio is less than 1 is liquidity, low debt to equity, which is risk, and high inventory turnover is efficiency, good ROE is returns to investor. It means if all these are balanced, the company is generally financially healthy, we can say that. So let's take some example for the same. So we will be taking our example. So first of all, we will be understanding our profitability ratio, where we will be understanding net profit margin, which will be calculated through net profit divided by sales. So our sales is 1 lakh rupees and our profit is 10,000. So if I want to calculate my net profit margin, so how to do that? I will be dividing my profits from my sales. So I will be getting 10%. What it means, company keeps 10 rupees as profit from every 100 it earns, right? Then coming to our liquidity ratios, where we will be understanding current ratio, which means current assets which is divided by our current liabilities, which means we are having assets of 1,50,000 and liabilities of 1 lakh. So how to come to our current ratio? We will be dividing our current assets from our current liabilities, and it will be giving us current ratio of 1.5. So it means company can safely pay its bill. And then third is our leverage ratio, where debt ratios are there. So if we want to calculate our debt to equity ratio, how to calculate that? So we will be dividing our total debt from our total equity. So if our debt is 1 lakh rupees and equity is our 2 lakh rupees, so if I want to calculate my debt to equity ratio, so how to do that? I will be dividing my total debt, which is 1 lakh rupees, and equity, which is 2 lakh. So I will be getting 0.5 debt to equity ratio. What it means, for every 1 rupees the owner puts, company borrows 50 paisa, right? And efficiency ratio, which means inventory turnover, which is calculated through our cost of goods sold divided by our average inventory. So our COGS is right now 5 lakh and average inventory is 1 lakh. So if I want to calculate my turnover, so I will be dividing my COGS from my average inventory, which will be giving me 5 as a turnover ratio. So company sold all its inventory 5 times a year. Next is our return ratios, which is returns to owners. So ROE, which is return on equity. So I will be dividing my net profit from my equity. So if profit is 30,000 and equity is 1 lakh, so our ROE is 30%. So it means owner earned 30 rupees for every 100 rupees he is investing, right? So this is what our ratio means in different situation. So coming to our case study, where I am taking Ria's tiffin business, which I have already taken in my previous session also. So if Ria has been running her tiffin service for 3 years, here what her key ratios say: net profit margin in year 1 she is getting 10%, and in year 2 she is getting 15% of net profit margin. What it tells us? Profitability improved and she earns more profit than previous year, right? Current ratio is first year she is getting 2 and year 2 she is getting 2.4. So it is very safe and can easily pay the bills. Debt to equity, which is 0.18, and year 2 it is 0.2. So there is low debt and company is financially stable. And ROE, which is 35% in year 1 and year 2 it is 48%. So what it tells us? So it tells excellent returns to the owner, it is showing, right? So what we understood in our this session, that we explored the world of financial statements and ratio analysis in the simplest way possible, without complex formulas or jargon. Just like we check our health with temperature, PP and sugar test, we learned how to check a company's health using tools like profit margin, ROE and current ratio. These numbers tell a story about whether a company is earning well, spending wisely and growing sustainably. The most important thing we discovered is we don't know, and we don't need to be from a finance background to understand financial health. With these basic ratios and simple logic, anyone, even a small business owner or a student, can understand how a company is performing. So next time if you look at a balance sheet or income statement, don't feel lost. Just ask simple question: is it earning? Is it spending too much? Is it growing? And use the ratios we learned today to find your answers. So thank you for being a part of this learning journey. Remember, finance is not about formulas, it's about understanding the story behind the numbers. So stay curious, stay confident, and keep analyzing like a pro, one simple step at a time.